How gold and silver royalty and streaming companies create value. Royalty and streaming companies are a unique investment in gold and silver. Many investors are aware of gold and silver mining companies as an investment option, but royalty and streaming companies are less well known. Let's discover how royalty and streaming companies differ from mining companies and create value. They provide funding for the mining companies to expand or develop their projects through royalty or streaming agreements. And in return, they receive a percentage of the mining company's revenue or metals produced at a discounted price. Royalty agreements are often called an NSR, Net Smelter Return. A royalty agreement is where the mining company pays the royalty holder a percentage, usually 1 to 3% of the total revenue earned by the mine for the life of the mine. Streaming agreements are often called a stream. A streaming agreement is where the mining company delivers to the stream holder a percentage, between 5 to 20% of one or more of the metals produced by the mining company. The advantages of royalty and streaming companies versus mining companies. Mining companies are responsible for the mining and exploration work, while royalty and streaming companies benefit from the revenue or production of the mines. Royalty and streams make money even when the price of the metal falls and the actual mining company's profit may be minimal due to high costs and expenses relative to their revenue. Royalty and streaming companies have high profit margins due to lower staff numbers and costs. Capturing upside. Most royalty and streams are life of mine, so the holder gets the benefits of additional exploration and upside which the mining company undertakes. They can generate revenue much faster compared to mining companies, as they can invest in a producing or developing company. This avoids the long exploration and development timeline many miners face to first production. Reducing risk. Royalty and streaming companies are not exposed to the potential risks of capital costs, overruns, and operating cost pressures, which are borne by mining companies. Most mining companies are regionally focused. However, they are able to invest in a globally diversified investment portfolio. Royalty and streaming companies escape concentrated jurisdictional risk, take advantage of opportunities around the world, and are more versatile compared to miners in changing market conditions. They invest in low-cost opportunities during market downturns and reap the rewards during market upswings. Royalty and streaming companies outperform the market. Returns of the top royalty and streaming companies versus gold versus the GDX. An index of 5 major precious metals, royalty and streaming companies greatly outperformed gold and the GDX over the past 7 years. The royalty and streaming companies selected for this index were Franco-Nevada, Wheaton Precious Metals, Royal Gold, Sandstorm Gold, and Mavericks Metals. Yearly dividends of top royalty and streaming companies versus top gold mining companies. Dividends of royalty and streaming companies are much more consistent and less affected by precious metal price movements compared to mining companies. Royalty and streaming companies' unique business model supports miners and produces cash flow, offering stability and returns for investors even during downturns of gold and silver prices. This is possible thanks to high profit margins and exposure to a diversified investment portfolio with built-in upside.